What's up guys, Brandon here. This channel is for people looking to follow someone else's investing journey, which is mine, and how I go about building my own personal long-term stock portfolio, and hopefully in sharing, be able to inspire you guys and help others along the way by sharing both my research as well as my personal investment plans. So if you haven't already, be sure to hit that subscribe button below and join me on this journey. So SPACs have been in the spotlight and are a quick way for late-stage venture-backed companies to actually go public. SPACs didn't actually interest me originally, but due to the fact that mainly that I didn't like the idea of buying a stock in a company that would then go out and look for a company to take public. But I have an exception, and today I'm actually going to be sharing about the first ever SPAC stock that I've bought and put into my growth stock portfolio, which I'm super excited about. So let's go. So the SPAC I bought is sponsored by Chamath Palihapitiya, a well-known and for many a very well-liked venture capitalist who was actually an early senior executive at Facebook and also owns an MBA team and took Virgin Galactic public through another SPAC last year. He's a very prominent figure in the investing world, and when he speaks, people listen. And when he spoke about this SPAC, I actually listened very, very intently. So the SPAC in focus today is called Social Capital Hedosphere Holdings, ticker symbol IPOE, and on the 7th of January this year, it actually announced a merger agreement with SoFi, the fastest growing millennial focused fintech company that has actually now transformed itself from originally being just a provider of student loan refinancing into now a full product challenger to US banks and at the forefront of actually disrupting the whole entire banking sector. Personally, I've built most of my personal stock portfolio around companies that I believe are disrupting and creating new markets for themselves, and this company is no exception, which is why I decided to invest in this SPAC. So in this video, I'm going to go over a few things. What is SoFi's disruptive model and value proposition? 2, their latest financial performance and projected performance over the next few years. Then 3, how much I invested in this stock and how this stock actually fits into my portfolio. So let's kick off with what is the social finance business model. So let me share an interview with the man himself, Chamath Palihapitiya, and the reason why he's such a strong believer in the SoFi story to actually bring it public through his SPAC.
Yeah, a lot of the things that I do is try to look back at some of the best investments we've made, like Amazon and Tesla, and try to find patterns. And in this, what I was trying to do was map those patterns into financial services, just because we're at a point in time where it's clear that the banking infrastructure really isn't meeting the needs of US consumers. And so what I did was just kind of systematically try to figure out what was broken in banking, and then try to figure out which company was best representative of the solution that people wanted, which I can basically tell you is 3 things. People want low to no fees, they want fair and transparent lending, and they want a full suite of products so that you can basically have a one-stop shop. And SoFi basically was the top of the list when I looked across all the companies. Yeah, in fact, the way that I think about this is I call this sort of the anatomy of innovation, right? You look under the hood of the best companies and the best CEOs, they do the following things. The first thing is, when you get a good product, you don't sit on your heels. You double down and you invest really aggressively to use technology to drive down the cost. And then what you do is you deliver those savings onto consumers. Then you launch many more products on top of the same platform. And the most important thing you have to do for people is to democratize access to a key resource. That's what Amazon has done. That's what SoFi is doing. Because the problem that banks have right now is after the great financial crisis, what they've done is they make money with hidden fees, with exorbitant fees. They have very restrictive lending practices. Ask anybody who's a middle-income person or a minority or a woman. It's incredibly hard to get access to the money you need to fulfill your dreams. And SoFi has fixed all these things, which is why I think it's such an incredible business.
So I'm not sure about you guys, but that was one of the very first YouTube videos that I actually checked out about SoFi. And the entire interview really compelled me to actually keep looking into this company and this story. And here I am now actually sharing with you guys why I actually invested in SoFi through this SPAC. So we all know the banking market is absolutely massive globally. Similar to the insurance industry that my other investment recently, Lemonade, is actually doing its same disruptive thing in. And funnily enough, just like insurance companies, banks are actually not that liked by people. Hidden fees, sitting on phone for a couple of hours just to be on hold, just to do a simple transaction that you could actually do online simply for some reason, and just a lack of trust are just some of the things that makes the whole banking industry ripe for disruption again. And this has actually been happening already with the whole evolution of neobanks and companies such as Square and PayPal. It's all happening in front of our eyes already. So SoFi's proposition is pretty simple. So when you actually look at their website and look at their business model, everything they do actually reinforces one of their 4 points of differentiation for what they call their members, not just customers. They are fast, which is what we want for any of our financial transactions, right? Things like applying for loans, opening accounts, etc. We just want to be able to do things quickly with our banks. Second is selection. So having a broad array of products for every single financial stage throughout people's lives and being able to offer that product easily to people as well. The third is content. So easy access for people to access information, investment advice, and most people actually don't have easy access to that kind of thing besides doing their own thing online and watching YouTube videos like this. And the last one is convenience. So a simple and easy way to actually use the product and a simple and convenient experience as well. So it's all done through their mobile app. So this pretty much sums up everything that you would actually hope for in a bank and someone to actually help you invest your own personal money. So there is an actual Gartner report that actually reckons that within 12 years' time, 80% of all financial firms will actually either go out of business or be rendered irrelevant by new competition such as social finance, by basically changing consumer behavior and advancements in technology. Now, don't get me wrong, banks make the world go round right now. I've invested in DBS Bank myself in Singapore as a dividend play, but I'm not expecting much growth and huge returns with that investment. But with an investment in SoFi, I am. So there was a mobile banking competitive edge study done by Business Insider, and they actually identified that 89% of respondents said that they actually use mobile banking, of which 97% were actually millennials. So think about it, in 20, 30 years time, these millennials of today are the ones that will be controlling the world's money, and it's companies like SoFi that are actually building that connection and relationship with them now and journeying with them to actually create a better financial future for themselves, and they are doing this at a rapid rate. So when I look at a company, it's important to also look at how loved their product or service is, and SoFi is actually no exception again. So for example, Tesla or Apple or Lemonade, Amazon, people are in love with these companies and what they offer, and ultimately their investors love how these companies perform as well. So everywhere I look for customer reviews of the SoFi service and product experience, it's all amazing reviews, and it's obvious that they actually have something really special that their customers are really responding to. And this is directly corresponding to their top line as well as membership growth, which I'll get into a little bit later. So overall market opportunity here is a huge tick. So what about how crazy this company has actually performed leading up to the SPAC merger, and also some of their projections for the coming years? So let's have a look at those. So their success to date, apart from their insanely happy and loyal customers, is what they call their strategy in terms of leveraging the financial services productivity loop, which is essentially where they actually build trust and a relationship in the first product offering that a customer adopts. So for example, someone opens a brokerage account or a savings account with SoFi. Then actually driving more product adoption and success in the next product offering, resulting in higher lifetime value, essentially money made from every customer, and a much lower customer acquisition cost, which is basically how much they spend in marketing and sales costs to actually acquire new members. So to the customer, this just means ease of banking, where everything is so simple through just one app that they offer, and their phone actually taking all the headaches associated with traditional banking. So I also wanted to share a little bit about their offerings and them actually becoming a bank. So SoFi is a lot more than just a personal lender at this point. They offer mortgages, personal loans, savings, deposits, payments, credit cards, brokerages, investments, insurance, all in this one single app, and everything can actually be done via their phone, which is ultimately what everyone wants nowadays. So actually back in October last year, SoFi actually made good progress towards becoming an official bank when they received a preliminary conditional approval for a national banking charter. They actually shared that once this comes through, they expect greater bottom lines with lower costs of funding as a bank, and also a greater market perception of their business, which in my opinion would open up actually even more business for them. So no company is successful nowadays without technology, and that is another really compelling part of the SoFi business which I want to share about. That company actually acquired this company called Galileo Financial for $1.2 billion back in 2020. This company itself has been long operating in the digital payment services industry, and is actually, in fact, some of the customers include people like Robinhood, Chime, and TransferWise. So a very powerful and successful company in itself. And also by acquiring this company, investing in SoFi gives you nice exposure to the payment processing space through which Galileo provides. So Galileo actually call themselves the technology behind fintech companies. So nice to see that actually SoFi is expanding its products, offerings, and revenue sources further beyond just customer services with the Galileo edition. So this M&A was done by SoFi to actually use Galileo to help them power their expanding suite of financial products, and at the same time offer another revenue source outside of those consumer services that I mentioned. So now the company's revenue is actually split across financial services, lending, and this Galileo technology platform, which helps diversify the company's income streams, which are actually all individually growing very fast. So all this stuff is great, but how does this actually translate into their membership growth as well as their financials? So let me share some slides of their investors presentation, which actually suggests a lot more growth ahead and an exciting future ahead for this company. So their membership growth itself has actually been strong with over 50% and most recently 70% year-over-year growth. And by the end of this year in 2021, they actually expect to have over 3 million customers using their products. And back to that financial services loop, the adoption of multiple products by each of their customers is actually expected to double by the end of 2021 at 95% year-over-year growth, which is insane and actually demonstrates that they are actually executing on that strategy that they set out. So actually, to give an example of this, they actually showcase that they gained $30 million in home loan revenue from just $1 million in acquisition and marketing costs. And as an investor, I'd be happy to see them spend a lot more of that money based on that kind of return as well. So looking at some of the other financial projections, they expect their adjusted net revenue to actually be up 43% at a compounded annual rate from an estimated $620 million in 2020 to a $3.7 billion target in 2025. That's absolutely massive. And this company is also said to be approaching this inflection point in the financial services productivity loop again, where they actually see improving adjusted EBITDA, which is essentially their earnings before tax, depreciation, interest, and that kind of thing. So from an estimated EBITDA of a negative $66 million in 2020, they actually forecast nearly $1.2 billion in EBITDA in 2025. And in fact, if they get that bank charter that I mentioned earlier, they actually expect this to actually have a really positive effect on their EBITDA by about another 25% improvement on those numbers. So when that bank charter comes out, I fully expect another pop in the stock price. So these numbers are exciting, but with more public attention now and this kick-ass CEO in Anthony Noto, who used to be the COO and CFO at Twitter, and also the CFO for the NFL, and also the head of investment banking at Goldman Sachs as well, there's every chance that this company will actually beat this guidance that they've set for themselves and actually spur the stock price even further. I think it's a great time for them to actually become public because the world demands services that they offer, and they're actually reaching that tipping point that I mentioned, that they'll actually soon deliver operating profits, which is always nice as an investor in these higher growth and higher risk stocks. So through that Galileo acquisition and also recently making its first expansion outside of the United States with this acquisition of a Hong Kong-based investment app called 8 Securities, the company is also really looking forward to expanding beyond the US and sets up for some exciting expansion plans ahead globally. Heck, I actually hope they come here to Singapore sometime in the future as well. So on to the last part of today's video about how much I personally invested and how this stock actually fits into my own personal stock portfolio. So obviously this company is not public yet, but you can buy shares in it through the IPO SPAC. So I opened my position last week when we had actually a one-day dip of about 7% in a single day, down to $19 exactly, which was where my order executed for 200 shares. So about $5,000 worth of stocks. At that point, I decided to buy in because it was about 25% from its all-time high of just under $27 at that point. So I must say I was pretty lucky because the following few days it rocketed back up to 25 and has been floating around there since. And normally my timing is not that lucky because usually when I buy a stock it drops usually first. But the rocket higher was due to a couple days after that the whole fiasco about GameStop happened and Robinhood actually stopped the purchase of shares. So allegedly a lot of people started flocking away from Robinhood and into other trading platforms like SoFi's. So it was just really lucky timing, but I'm really holding this stock as a high risk but high return long-term holding. So I'll be looking to add occasionally to this holding on any sort of volatile pullbacks, which I fully expect in a stock like this. And it sits essentially next to like my Lemonade and Teladoc and Trade Desk investments, where I see them as being winners in a winner take most perspective in a future of massively growing and changing markets that these companies are carving out for themselves. So you can check out my channel if you want to learn more about the rest of my portfolio holdings. It's all up there on my YouTube channel. And that's it for this video, guys. I hope you liked it. Exciting to add the first SPAC to my investment portfolio, and I'll keep an eye out for any future ones as well. If you got anything out of this video, as always, hit that like button, subscribe to this channel if you haven't already, and next week I'll be sharing a video about a new investment that I'm going to be making in my SGX portfolio, so stay tuned for that one. And until then, see you guys.